So hello guys, welcome to today's video. And in today's video I'll be taking you through the relative index indicator, and this is one of the most accurate indicator that I've used since I started trading. Trust me, I've used several indicators, the moving average and a lot more, the ADS. I've used a lot more different indicators, but I have not seen indicator that gave me the perfect result I need as this of the relative strength index. Note, this doesn't mean that this indicator is better than the rest, but to me it's the simplest to understand as a beginner and one of the most accurate ones that I've used since I started trading because it's simple and easy to understand. So in this video I'm going to break down every single thing about the relative, which is known as the RSI indicator, to you, and also show you how you can use it whilst trading. And I'm going to share with you some key tips to look out for whenever you're trading with this indicator. So I don't want to talk much. Let's get straight on my laptop, because on this channel I mainly focus on crypto and forex trading, and I do everything practically so you get how it works. So that I said, let's get straight on my computer. Let me share with you the practical guide on how you can set up this indicator and how you can start trading with it. So that I said, let's get straight into today's video. So hello guys, welcome, and in this video I'm going to introduce to you the RSI indicator, also known as the relative strength index, that I've already said in the introduction of this video. So if you are using TradingView or any other trading system and you need this indicator, simply go to your indicator tab. I don't know for the platform you are using. For mine, you can see it's tagged as favorite here. So in case you go to your indicator tab, simply type in RSI, you can see it here, or simply search for relative strength indicator, relative strength index, and you are going to get it as well. So you can see this is it here. So I'm just going to max it out so I can see it clearly. So the main brain behind this indicator is that it has two different levels on basic system, and then on normal system, when you open it first, it's going to have three different levels. So here are the three levels. The first one here is at this point. It's at this point known as the 70 mark. 70 mark. So let me change the color to white. So the 70 mark. So at this point it's known as the 70 mark, and then another at this point also known as the 50 mark. So I'm just going to mark out every single part of it so I can get every single explanation I'm giving to you. So here it's known as the 50 mark, and then the final one is simply the most used part of it is actually the 30 mark. So here is the 30 mark. So this time I've actually marked out every part of this indicator, and I'm going to give you the idea behind each of these marks that I just wrote right now. So the first one is actually the 70 mark up here. So the 70 mark here states that once the market gets to this 70 mark here, it shows that the market has actually been overbought, meaning you should be ready for a sell market. So get ready to actually enter the trade as a sell trade. That is the idea behind the 70 mark of this indicator. And then the idea behind the 30 mark is simply telling that once the trade actually hits the 70 mark here, it's saying that you should be ready to enter the market as a buy market, meaning the market has been oversold, so you should be ready to buy. So however, this indicator isn't actually that straightforward. It doesn't just reflect always like that, and I'm going to show you a typical example right now on the same screen. So as for the 50 mark here, it's not always considered, because once the market keep going around the 50 mark, that is to tell you that it's actually a ranging market. So once you see it consistently on the 50 mark, it's simply telling that okay, this is a ranging market, don't trade the market, just ignore it. So now hope you get to understand the idea behind it. The 70 mark means overbought, and then the 30 mark actually means oversold, meaning the market is about to take the opposite direction. So now here is the thing you need to know whenever you are using this indicator. The first point here is actually the 70 mark here, which says that once the market actually reach here, you should be ready for a sell trade. So here is the truth. It's not always like that it gets to the 70 point and then it start going down, it start coming downwards to the opposite direction. Then okay, let me change back that to the yellow. It's not always that once you get to the 70 mark here, it will automatically take a downtrend. No, it's not always like that. There are times whereby the market will get to this 70 mark but still continue its uptrend to even an upper level. Like take example of here. Here's the 15-minute chart for US dollar, Japanese yen. And if you look carefully, you can see that at this point, let me get it up. At this point here, which is the 70 mark that everyone is told that it's actually a sell, it's time to sell the market. The market then took another serious uptrend to the upper side again. You can see it up to this level before it started diverting. So what is this telling you? This is telling you that once the market actually gets to this 70 mark, do not rush to trade it as a sell trade. Always look out for break of structure. So when I mean break of structure is simply assuming, so what I mean by break of structure is simply, let me get rid of this. It's simply once the market get to this 70 mark here, don't rush to enter, wait for it to drop down to break the recent past mark. So for example, here is the recent spot here. This spot here is considered a recent spot. So let me get a brighter one. So this spot here, you can see it here. This is the recent place that I actually see this market balance. This, or you can use this if you're someone who can actually take risk. So once you see the market actually get to this 70, wait for it to come back down and then break this previous structure that he has made. So for me, I like using the second structure that seems to be way more balanced than this one. So I'll always go for this one down here. So let me change the color of the one I will actually use. So if I'm to be the one, I'll actually use this level here. So I'll always wait for the market to fall back and then break this level before I enter the trade as a sell trade. Because if the market is able to get here and then fall back to this level here, it's telling me that, okay, the market is in a stable condition and it's actually a downtrend. Now it's time for you to trade. Because if you should follow the description for this AI from this indicator at the default level, which says once you get to 70 here, you should enter the market as a sell trade, meaning you would have been caught out as an breakout. This breakout here would have actually gotten you out of the market, because you cannot put your stop loss above this level. I don't know how far you take your stop loss, but on a normal basis your stop loss can't go above this level. And that's to tell you that if you are trading with this indicator, always look for break of structure before you enter the market. Wait for the market to fall back down and then give you a clear chance that, okay, it's time for you to enter the trade before you enter. So this doesn't mean it will always be like that. No, there are times whereby it actually get there and then reverse. Take a look at this point here. You can see at this point here, when the market hits this point, it did what it normally says it will do. It did what? It actually reversed. You can see it reversed up to this level, and then that's to show you that, okay, it actually does what it promises that he will actually do. But note that this is not in every case. That is simply the first point here when trading with this indicator. And then the second part is actually, so I'm just going to get rid of all drawing. The second one is actually when it comes to the sell market. So just as it do for the buy market, it also applies same thing to the sell market as well. Take a look at clear example of it here. So with the sell market, you are told that once the indicator gets to this level, you should be ready to enter the market as a buy market, because it will be going upwards. Well, the truth is that just as it does for the buy market, it also does same for the sell. Or for the, just as well it does for the top level, it also does same at the bottom level here. You can see that over here, immediately it hits the 30, it did not just take a straight reversal. No, it came back down before it actually took a reversal back to the up level again. And this to tell you that you should not always rely on these indicators when trading. So let me get rid of it and then show you the importance of break of structure whilst trading with this indicator. So with this indicator, you can see that the recent structure it made before it actually fell down was actually this point here. You can see the point here. Let me use a straight line here. You can see this was the recent point it actually made before it took a reversal, before it came down fully. So now here's what I'm telling you. If you want to trade with this AI, always look out for this sort of point. So always wait for it to come back and break it. So if you take a closer look at it here, after it got to this down level, it went upwards and then it continued. Then when it got to this level, it couldn't break the structure. Then it reversed down again, meaning if you had entered this market at any of these points, still you will still be caught out. So but take a look at when it actually went straight upwards. You can see that it came straight, and then when it got to the level here, following this place, you can see that after he broke from this place, meaning breaking the recent structure that he has done, which is this one or this one. So let me mark the recent structures from that he actually created. One is this and the other is this. So you always wait for it to break one of these structures before you enter the market. And take a look, after it broke it at this level, what did it do? The market went straight upward and even broke out of the 70 and even broke out of the 70 mark. So if you want to use this RSI, these are the things you should note whenever you are trading, always look out for break of structure from this indicator before you enter the market. So if the previous structure isn't broken, don't attempt to enter the market. But if it's actually broken fully, then it's the right time for you to enter the market. That is simply the lesson behind using this indicator. So that is simply all about this video, and hope you get to understand everything here. So even if you don't understand, you can drop a comment down in this video, and also join my Telegram channel. The link will be down in the description. The channel is not just an ordinary channel where I drop things every day, but it's actually attached to a group where you can ask any question related to crypto or forex trading. So in this video, this simply all about the relative strength index, and hope you understand it and the conditions to look out for before you trade with this indicator. Trust me, this indicator is good provided you follow the valid instruction that I've shared with you in this video. So have a nice day. Bye.